Hello guys and welcome. In this video we are going to talk about regular RSI divergences. And here are the three main takeaways that you are going to get from this video. But before we go into some examples of what I mean by these three key takeaways, let me first show you what is a divergence, what is a regular divergence for the one of you who are not really aware what divergence is. So basically there is a bullish divergence, which is this one, and a bearish divergence, which is this one. You are going to have bearish divergence when a price is making a low and then it makes a lower low, while RSI is making a low and then it's making a higher low. This is a bullish divergence. You see, so price is making a low and then a lower low. In the same time, RSI is making a low and then a higher low. This is a bullish divergence. Bearish divergence on the opposite side, it's basically exactly the opposite. So the price is going to make a high and then a higher high, while RSI is making a high and then a lower high. This is a bearish divergence. So I hope it's clear for the one of you who are not really aware what divergence is. And here one more thing, I can put actually one more takeaway: momentum before price. This is key, guys. Momentum before price. You have to remember this and always have it in the back of your hand. You see momentum before price, what happens? So basically the RSI, the momentum indicator, showed before the price war is going to occur, right? You see, after this, I mean, the price was in a downtrend. After this, it had a nice run up, a very nice uptrend, and then the opposite, basically after the divergence, you see the downtrend. But I show you a good examples of divergences. I will show you later on what I mean by that. Divergence doesn't mean change in trend, because it really doesn't mean that, and we will dive into that in a little bit. But let me first show you these three key takeaways that you are going to have from this video. The first one, just like I said, divergence doesn't mean change in trend, because there are so many people who are trading that way. They think that when they see a divergence, it is going to mean change in trend, just like in this case. Yes, it happened here, yes, it happened here, but that doesn't mean that it's always going to happen. And divergence really doesn't mean change in trend. It means that there should be some pullback, right? But I will show you, just like here, what happened. You got the divergence, small pullback, and look what happened. So divergence doesn't mean change in trend. Divergence, the second key takeaway, is divergence alone is never a reason for a trade. You have to have a confluence of reasons, and now I will dive into that as well, what I mean by that. And the third one is that you can use divergence to exit or to take profits. For example, if for some reason you are short here, when you notice the divergence, you can use it as a take profits and to exit your trade, right? And then if you see a reason, you can re-enter. But this is how you can use divergence as a alone, I mean as an only reason to exit a trade, basically to take profits, but not to enter a trade. Only for that reason. Just like the same here, if you were in a long for some reason, it doesn't really matter what your system told you to be a long here and you are a long. When you spot the divergence, you can take profits and exit the trade. Okay, so let's now dive into some examples. Here I draw a support and resistance. So this is one way to trade divergences. But you see, the divergence is not a reason alone, right? It can be a main reason. It can be the main reason, but you have to have a confluence of reasons. For example, here it's the same. It's basically, this one is the same example that I show you here, but now we have a confluence of reasons. What is the confluence? For the bullish one, we have a support here. So basically, when you see a divergence sitting on support, bullish divergence sitting on support, this is when we are in business. This is when you are in the game and you can take and trade this divergence. The same here happen, bearish divergence at resistance. Now you have a confluence of reasons, and again, the divergence can be the main reason, but not the only reason to take a trade. So this is That's why I gave you this example here. The same one is here, the same divergences. As you can see, they worked out perfectly because there were a confluence of reasons, right? Here it is a support, so basically you are taking bullish divergence at a support and bearish divergence at a resistance. How did I draw my support and resistance? I have another course for drawing, very good one for drawing support and resistance regions and zones. I'm not going to go into that right now because this course is not about that, but basically it's an inside candle technique. You see this inside candle with a lot of volume, you see the volume here, so basically you can get this zone where the price stopped, you can get this zone and just drag it into the infinity, and you will see that it's going to play out. It played out here and then it played out here again. The same is with the support. I can show you real quick, but again I have another course on that. We are not going to dive deep into that right now. You see, after a run up, an inside candle with a huge volume, you can take the whole candle, and basically when we regain it here, it's already a support. You see it got tested, held, tested again, and price took off, tested again here, price took off. So now you see this is a support, but this is on another course if you are interested in how to draw support and resistances. The point here is that now you have confluence of reasons. Price is sitting at support and you have divergence. Now we are in business here. Price is right at the resistance. You see, right at the resistance, and you have divergence, bearish divergence. Now you can take this trade. Again, here I will show you another example, and I will show you how you can basically, let me just remove these lines, how you can enter when you spot a divergence. So basically, again, here it's the same way I draw support and resistances, but anyway, we are not going to go into that. So this is a resistance right now. This is a 2-hour chart. You see here you have bearish divergence at resistance, bearish divergence at resistance, which is what we are looking for. Okay, so now you can play that in aggressive way and enter on a candle before the divergence is confirmed, right? You can play that, but I suggest you to play it in another way, because you see, so price is here, RSI is here, now price is higher here and RSI is lower, so it's obvious that there is a divergence, right? It's obvious because price is higher already, but RSI is not. So you can enter, you can start already scaling in a position if you want, but I will show you another way. So basically, let me see, where are my tools? So you will see the low of the RSI, right? So it made the high, then it made a low, then it started to run for another high, right? So you will take this low here, you will put a horizontal line, and when the RSI breaks below, this is already changing market structure, right? But there will be another video in details about market structure on the RSI, because this is crucial. Even on the price, this is probably the most important aspect on the price in general, and on the RSI it's working the same way. So basically, just like I told you, momentum before price. Now, right at, you see our horizontal here. Where did the RSI broke below? Not here, but here on this candle, right? So basically on this candle. So now we have a change in market structure, basically a bearish market structure. So far the market structure was bullish. Now we have low, lower high, and then now you have a confirmed lower low, which is a change in market structure right at this candle. And just like I told you, momentum before price, you see the RSI showed that we have change in market structure before the price showed it, because the price had to break all the way. Basically at this candle the price showed a change in market structure, right? But but RSI showed it earlier, right? So basically what you can do if you want to trade divergence that way, you can enter on the candle when the RSI broke below this low, basically at this candle. So if you are trading this divergence, you are going to enter here, set your stop loss above the swing high, and ride this bad boy, and let's see what happened. This is ideal example because Now you are in a short, and now you are getting bullish divergence. So what we were talking about earlier, when you are in a trade and you see a divergence, you can use it as an exit, as a solely reason. You don't even have to have a support and resistance. When you see the divergence, you can exit to protect yourself, to protect your profits, because you are in a nice profits, right? To protect your profits. And then if you see some other reason to re-enter, you can re-enter, even if it's at a worse price than your exit. It's still okay. The main idea is that you are protecting yourself. But we are going to look at this example as if we are not on a trade, but we want to take a trade from this divergence, right? So here we are sitting at support. Remember, just like I told you, bullish divergence at support and bearish divergence at resistance. This is what you are looking for if you want to trade on the divergence solely. I mean, yeah, basically if you want to take trades based on the divergence. So now you have a low, a lower low on price, a low, and then a higher low on RSI. So what are we doing here? You are doing the same just like I show you above. So you want the price, the RSI, basically to break above this level, and now this will be changing market structure on the RSI, because you see you have a low, you have a high, now you have a higher low, and now at this point, right at this candle, you have a higher high, which is change in market structure, bullish market structure. You see, this is right at this candle, you are getting the change of the market structure. So you can enter on this candle, set your stop loss below the swing low, and write this bad boy until you decided for some reason to exit. This is the way that you can take trades with divergences, with a confluence of reasons. Now I showed you with support and resistance. You can use it if you want with dynamic support and resistance, which is moving averages. You can use it with some pattern, whatever you like, but there should be more reasons, not the divergence as a reason alone. Because look what will happen here. I prepare you another example where it did not work out, and let's see what happened here. And this will happen many times, guys, because divergences, they occur in a strong trends, and they are a signal for a strong trend. They are not signal that the trend will change. Yes, sometimes the trend will change, but in general they are signal that there is a strong trend. And it's I mean, you don't really want to enter against this strong trend, and if you enter, you have to be aware that you are counter trading. Another thing that I wanted to point is that basically, if you are entering on a divergence alone, you have to be aware that you are counter trading, because you see here the trend is up and then you are entering based on a divergence. You have to be aware that you are counter trading. And just like you know, this is, I don't recommend counter trading for new traders. You can make a lot of money that way, but you have to be specializing in that and to be professional to trade counter trend. Better stick with the trend. But anyway, let's see what happened here. Let's see why it did not work out here. So what do we have here? We have higher high in price, and we have lower high on RSI, right? So this is clear. So this is a bearish divergence. Now, if you are trading the bearish divergence in the way that I showed you, now we are not going to look if this is a resistance or what. Let's imagine that it's a resistance and that you want to take this trade and this divergence. You want to go short here, basically, when you notice the divergence. Let's say that you have another reason, so you have confluence of reasons, and you are looking for an entry now. You remember what we are looking for. We are looking for this low to be taken out and to enter on the candle, right, on the candle close. But what you will notice that it did not really happen here. Did it, guys? No, it did not happen here. What happened instead is you got another run here, which basically created another divergence. Do you follow on this one, guys? So basically you are not going to get entry here at all, because the RSI did not break below, right? You remember we are waiting for the RSI to break below and to enter on the candle close, but it did not happen. You will notice that it happened here, but before that we got another run and another divergence. So now we have a divergence from here to here, and from here to here. And now you are okay. I will enter on that one. You are setting here your horizontal to wait for entry, and you will see that right at this candle you got an entry, right? So basically at this candle you are going to enter a short trade with a tight stop loss above the swing high, right? So let's see now what happened. Why it did not, basically it worked out because you see it gave you a nice run of, you are going to enter here at the maximum, it was 4.6%. So basically you are not going to take a loss here for sure. I mean, when you have a run like that, more than 2-3%, whatever you like, you can you can move your stop loss to break even, right? So you can move your stop loss to break even, so you are not going to lose anything on this trade. But this is not what's the point now that I want to make. The point is why it did not work out, this divergence. It worked out actually, but why so shortly lived? And then look what happened after that, a massive run. Now I will ask you if you are noticing something here on the RSI and on the price. And I guess most of you will not be noticing what's going on here because this topic is a little bit kept in secret in the trading communities. I don't know how, but it's like a top secret. No, almost nobody is talking about it. Everyone is talking about the regular divergence, but nobody is talking about this. And what is this, guys? It is a hidden divergence. Hidden divergence. And now there will be another video that we will go through that in details in the hidden divergences because it's my favorite divergence. And you can take trades based on hidden divergence alone. Not like the regular. With the regular you have to have another reasons. With the hidden you can take a trade alone based on this reason. What is a hidden divergence? You see how the RSI made a lower low here. What happened with the price? The price usually will make a higher low. Now in this case it's a little bit like a double bottom, right? It's a little bit like a double bottom, but it's still a hidden divergence. And the hidden divergences, you will find them after a regular divergence. And what happens is that they cancel the regular divergence. So when you see a hidden divergence, this is a hidden bullish divergence. When you see a hidden bullish divergence that is after a regular bearish divergence, the bearish divergence is cancelled and you can expect that the price will continue to run. Because the hidden divergences, they are showing trend continuation, trend continuation, and there's I love them basically. I love the hidden divergences, and on the next video we are going to talk more about them. So this is it for this video. See you in the next one.